Hello everyone and welcome back to another video. In this video, as you guys saw in the title, I'm going to be talking about how to stay confident after a losing trade. Alright, so I took one loss yesterday and I took one loss today. Consecutive losses on US 30. Maybe I should stay out for US 30 for a little bit. Jokes aside, I'm going to show you guys how to stay confident after taking a loss. Okay, I took my first loss right over here. I had shorted the market right over here, thinking that the market was going to break below this area of support, retest, and then pull back. Didn't happen. So my next trade was a buy right around this area over here. Same thing. I thought that the market was going to move up, come back, retest, and then move for new highs. Okay, I wasn't wrong for the second trade. I just had to wait a little bit more. Okay, so let me break down very quick this first trade. I had entered the market right around here, to be more exact, at 42.226.95, and then my stops was 42.60. So I had a very big stop loss. Okay, very big. Now the reason why is because the only place that I could find to put a stop loss was right below this 1 hour low over here. Okay, this is also a 4 hour low as well, I believe. Yes, so right over here is 4 hour low, and I was willing to risk around 166 points for the trade to make back close to one to 2.5 risk to reward. Okay, so this was my initial trade setup. All right, price was above the moving average. We had just closed on this huge engulfing candle right over here. Market was pulling back. I thought that this was a good time to enter for buys. It wasn't a good time. I just had to wait a little bit more, but I didn't lose the confidence, and I didn't lose the setup that I was gonna look for. Okay, so I decided to place a fib from this low over here to this high. Okay, and I'm gonna give you guys a tip. Okay, this is my fib. This is my fib. All right, so if you guys want to pause the video, take a screenshot, give you guys a couple of seconds. This is my fib configuration. Nothing else over here, and then nothing else over here. Okay, so I have basically two levels that I like a lot. It's the 38.2 and the 61.8. Whenever price hits 61.8, most of the time it reverses, right? And the first target is the 23.6. The next target is negative 27.3. Okay, so as you can see, we hit here, but that's if it hit 61.8. Now, if it's hitting 50, I'm looking to get back to this zero area. Okay, looking to get back to this highs or break these highs. So market just reversed at 50, and I was looking at the 4 hour time frame to be more exact. Okay, so the 4 hour time frame, as you can see, we have a bullish or a reversing doji right over here. If you guys don't know, I think I have videos explaining candlesticks, patterns in candlesticks to be more exact. So this is a reversal candle. This is basically saying to us that the buyers are starting to get control of the market, means that price is gonna push up. Okay, so we have one confirmation. We have the moving average underneath price action, and we had just reversed off of the 50 and the 38.2 over here. Okay, so I decided to enter for buys, and to be more exact, I think it was right over here, 42.174.75. And I exited, well, stop loss, exited at around 42.344. Okay, stop loss right below. I'll leave it over here. This is right below the 1 hour candle. Let's see how this looks in the 4 hour. Yes, so right below this candle over here is my new stop loss, and then old stop loss is out. So 1 hour time frame, stop loss right over here. This is fine. This is a 1 to 2.3 risk to reward. Okay, I exited my full position right around this 0 area. Okay, I already had an alert, so I was on the road. I wasn't at home on my computer waiting for the setup. I went to live my life. I had an alert for right over here. This is how you place an alert. You go right, this basically cross over here, and you add an alert. So whenever price is coming back here or is touching or crossing, you receive a notification on your phone. I received the notification, I decided to close, and I was out for the day. Now again, I didn't lose the confidence of entering this trade because I still believe that the trade was going to work. And the most important thing is I also believe on the risk to reward of the trade. Okay. Now I am down 4% for the month and about 2.5% for the day. Okay. Nothing bad. June, I can still make it up for it. Today is the 3rd, so I still have a lot of time, and I'm just watching the market, seeing how everything goes, going with the flow of the market. Okay, and that's it. That is how you stick with your emotion. Not stick with your emotions. How you stick to your plan, and how you develop through time that mentality of, okay, I'm not gonna take 20 trades. I'm not going to over risk my account. I'm not going to over leverage my account. I'm taking small trades with good risk to rewards. And then this is how it's going to play out at the end. Okay. So even though I won this trade, I still lost one trade here and then another trade right over here. So now I am down on the day and the month, but I'm still going to make up for it. And it's an amount that I'm comfortable losing and the amount I'm comfortable trading without in my account. All right. So hope you guys understood all of this. Manage risk and then manage also your emotions when you're trading. Okay. That's how you stay confident. All right. Thank you guys for watching. I'll see you guys on the next one.